This is Trading Matters.
Well, let's bring in Roger Montgomery, an independent analyst at rogermontgomery.com. Roger, good to have you with us today.
Nice to be here, Oriel.
I want to ask you first about, we're talking about the stocks that you like the most on the market today. I noticed one of them is Macmillan Shakespeare. We've talked about this before.
Yes.
In fact, just a few weeks ago, because it was likely then at that point that we were going to see this 40% tax coming through on resources.
Yeah, that's for Macmillan Shakespeare. There's a different tax issue, and in fact, out of all of the recommendations in the Henry Tax Review, the ones that may have impacted Macmillan Shakespeare don't look likely to have been picked up by, or haven't been picked up by the government. But let me say this: nothing will be legislated until after the next election. That requires this government to be re-elected, and I know that the latest opinion polls are that the Libs, on a two-party preferred basis, the Liberal coalition actually looks like it's just got ahead of the Labor Party. So who knows whether any of these things will be enacted and in what form they'll actually take. I find it amazing, that the government had a fantastic opportunity here to change the landscape of Australia and to make the place a better country to live and work in, and they've missed that opportunity. They've completely lost it, and they've been very cynical about the way they've gone about recommending or taking up some of these recommendations. They all don't come in till they're re-elected again.
Are you surprised? I mean, it's an election year. Should any of us be surprised?
No, I'm not surprised. But what it actually means is it means that the political system in this country, unfortunately, is an anchor tied around the ankle of the economy and of change. And it strikes me as very disappointing that we won't see anything happen that's really meaningful in this country in terms of our tax legislation.
Yet.
Well, yep. I wonder whether we will or not, yeah.
Yep, good question. All right, Roger, let's move on. We've got the RBA decision coming through in about 45 minutes from now. Sure. Many in the market are looking for a 25 basis point rate hike, but of course that's not a given. I noticed, though, that one of your other stocks that you like quite now is a retailer, albeit a specialised retailer, I guess we could say, with the Oroton Group. Yeah, look, Oroton and JB Hi-Fi, quite simply, I'm interested in buying great businesses when they're cheap, provided I believe that their intrinsic value is going to continue rising at a good clip over the next few years. And I'm really not worried about the minutiae. And these two businesses, JB Hi-Fi and Oroton, are trading. Just to give you some idea, I've got a valuation on Oroton of $8.42, which is considerably higher than the current price. Which is $6.65.
At $6.65 at the moment, rising to $9.70 in 2011 and over $10 in 2012. Now, all that requires is that current rates of return on equity or thereabouts continue over the next 3 years, and I think Sally McDonald can actually do that. JB Hi-Fi is a similar sort of thing. You've got a business that's worth $20 at the moment, going to $22 and then $26 over the next couple of years.
This is a stock that you've liked from the start.
Well, as you know, I think I mentioned it here first when it was at about $9, and its value continues to rise over the next couple of years. Investors are very, very nervous about interest rates and a 25 basis point increase. Well, if interest rates do go up higher, look, guess what? JB Hi-Fi will buy market share from its competitors, who will also suffer declining revenue and declining EBITDA. They will fall by the wayside. They don't have the margins. They don't have the capacity to withstand a drop in their revenue line or the interest on their debt, an increase in the interest on their debt. And so JB Hi-Fi will buy market share and they'll come out of it stronger than they went into it. And people forget that. People look too closely at a single decision by the RBA and don't look at the big picture. And we're seeing that in a whole range of areas at the moment. Same thing, but reversed, happening in coal stocks and gold stocks. And the prices of these things are way above what they're intrinsically worth. And people say, oh, Roger, your intrinsic values must be wrong because, look, the CEO of this company is willing to pay that price, so clearly what you value it at is far too conservative. Well, CEOs are just as prone to overpaying as a mum and dad investor, and we've seen that with Foster's and Paperlinks and Wesfarmers, and it just happens in the corporate world as much as it happens in private investing.
Absolutely, something to watch out very closely for. Roger, good to have you with us today.
Thank you very much, Oriel.
Thank you so much for joining us. Roger Montgomery with us there from rogermontgomery.com.